All right, Rob, we're back at it. I have no sense of space and time. Did we even record last week, or did we skip last week? I don't remember. I think we didn't, right?
No, we skipped.
Right. So we did
We skipped, and we did 2 episodes on artificial intelligence, and then Ozempic. So we haven't been into the weeds of what's actually going on in the world for quite some time.
Well, we don't lack for options to talk about today, so why don't we get down in the weeds a little bit? And though I hate to say it, I think we can't avoid talking about the United States first. We're going to have to talk about the election too, so maybe we'll back into that. But let's start maybe with the latest CPI print that came out this week. It's being spun as a pretty good print. I don't know. I'm always more pessimistic, I think, when it comes to these inflation prints than the general media narrative seems to be. But if you didn't see the print, so 12 months, year-on-year inflation is 3%. In June, so month-on-month, a decline of 0.1%. If you break it down, food is actually still kind of up a little bit. 2.2% overall, food away from home up 4.1%. These are year-on-year figures. Energy seems to be the source of the decline. So you've got a 1% increase year-on-year for energy, a 2% decline month-on-month for energy. Used cars sticks out like a sore thumb, down 10.1% year-on-year. So the used car phenomenon has gone away. But why don't we start with inflation? Because I've said here before that every bad inflation print for Biden was just another vote for Trump, probably. How did you think about the inflation data?
Just to put this in context and how we got to where we are today. So I think the last time we really spoke about this publicly was sometime in May, if I remember right. And at that time, what we said was, we were done with the back padding because the thesis we had basically played out, which was that the U.S. is experiencing faster growth in the end of last year and into the early part of this year than people thought. And that inflation was going to be much more durable, much stickier than people thought. And that basically played out. Interest rates, remained high like we thought. And the last time, I think I said, we're sort of transitioning a little bit and looking for ways that the thesis is changing. And I think between fast forward to today, and you've seen pretty substantial evidence that it is changing in some ways and not in others, which I think is important to talk about. The way it is changing is, since we last spoke, the data has come out very clearly to show that U.S. growth is really starting to fall off. Whether you're looking at the manufacturing sector, which, after early this year, when you had a brief resurgence like we were talking about, it's since been bleeding down again and getting worse. So that's a big deal. But the bigger issue is the service sector. So the service sector had been chugging along very, very well, throughout all of 2023, early 2024. And then just recently, it started to slow down dramatically. And in the first week of July, the June services index came out, and it was way worse than people expected. It was 48.8 versus 52.7. So above 50 is expansion, below 50 is contraction. So you're talking about a huge miss. And specifically, the new orders component of services, which is the forward-looking component, right? That was 47.3 versus expectations of 53.6. So the takeaway here is you're seeing a really big slowdown in U.S. macro. And you can see that in markets, right? So like my old punching bag, Nucor Steel, stock is down 21% from a few months ago when it peaked. And they came out at the beginning of June, and they gave advance warning that their Q2 earnings were going to be way below what was expected. And the expectations had already come down, and prices are coming down. Steel demand is waning. All of that part of the economy is really starting to roll over, with the one exception of manufacturing construction. That's the only part that has remained strong, but even that has come off the boil dramatically. So at the beginning of this year, manufacturing construction was growing 40% year over year. And now it's growing 20% year over year. So that's all of the CHIPS Act, all the IRA stuff, all of the battery factories, all of the semiconductor fabs that are going in, all of that stuff. That's the waning impact of that stimulus working its way through. So yeah, you are seeing that have some impacts on inflation, and it's probably going to continue. The bigger and stickier and longer term issues are a separate matter, which we can talk about, but I'll pause there.
Yeah, I mean, just an anecdotal data point, which, take it for what it's worth. But so I'm back in Georgia right now for various reasons. But one of the reasons was there are some trees at my old family house that the insurance company was going to cancel the policy unless we trim these trees back from off the house. Fuck you, insurance company, whatever. But okay, we have to do it. And the guys were trimming the trees out at the house yesterday. And the guy I was talking to, he said business was super slow this summer, that since COVID, they had basically been ripping. And I feel like one of the best ideas that everybody had was trying to buy up lawn care companies or tree companies or these kind of service companies that were doing these things on properties. And apparently just the last 2 months, it has fallen off a cliff. They were like desperate for work going forward. Yeah, so I don't know if you have this experience, Rob. Anytime anybody asks me what I do and I tell them what I do, either they're completely bored or they look at me and they're like, so should I invest in more Tesla stock or should I sell my Tesla stock? So I was trying to get him to focus on the trees and he's trying to talk to me about Tesla stock. It was a real moment of cognitive dissonance. Callback.
Memories.
But anyway, I don't know what to do with that data point, but it was kind of striking to hear that from somebody who I wasn't expecting quite to hear that from. I don't know if you think that's worth anything.
No, it absolutely is. I mean, that's where the slowdown has been most marked, is in everything related to construction. Residential investment is slowing and rolling over now. Like, the anecdotes support the data for sure. So it is good data.
It's dangerous to go from what is happening to why it is happening. We risk the danger of going from objective observers to trying to philosophize. But if you had to take a guess at why this is happening now, I would venture it's probably not the Fed and it's probably not interest rates. There must be something else going on. The easy scapegoat is going to be the election and people are feeling uncertain and there's volatility. Why do you think the sudden shift in expectations?
I wouldn't attribute it to any specific factor other than, this notion that we repeat all the time, which is cause and effect. And we've just experienced a huge boom for the last 2 years, not only around investing, but also around people's paychecks. Wages were on fire. Everyone was super confident that they could switch jobs, at the drop of a hat and make more money. Have you seen the numbers on how much people are spending on travel and experiences and going out and Taylor Swift tickets? And I mean, it's been, the roaring 20s. So I don't think it's necessarily the election or any specific thing other than the hangover effect and the after effect of that, which, high interest rates do play their part, but it's not, like someone flipped a switch and all of a sudden everyone is losing confidence. Like, this is just how it is. And usually, corresponding to the strength of the boom is the weakness on the other side, the severity of the hangover. So that's something to think about.
Yeah, it's funny you say that. So I don't know if you saw Delta Airlines, the CEO was out yesterday. He gave this interview and he talked about how the airline had overestimated supply or demand. So they had prepared for an 8% increase in demand and they were only seeing a 4% increase in travel interest this summer. And so he was trying to explain why Delta was revising, I think, some projections down. And I wanted to be like, bullshit, I'm on your airplanes all the time. What do you mean you're oversupplied? There's no possible way you're oversupplied. If you are, you're really doing something wrong. But I also thought about you yesterday because this is funny. I was on the plane to Atlanta and the entertainment station was broken. So I couldn't change to any of the movies or the shows or anything like that. The Wi-Fi was also broken, so I was really stuck. And my entertainment station was just stuck on one channel. It was CNNBC, and Jim Cramer was doing the morning roundup. And I thought about you because he was talking about Nucor, and he was like moaning and wailing, how could Nucor be down so much? This is terrible. And then somebody asked him about the broader economy, and I thought he was going to cry. He was like waxing poetic about how this was the greatest economy we've ever seen, and we should just appreciate it, and blah, blah, blah. And I wanted to, I'm sure every day Jim Cramer's like that. I'm just not normally watching, but I had this impulse where I was like, okay, maybe the top is in if Jim Cramer is about to cry on national television here.
I think he cried in 2008 too, if I remember. he was pretty emotional at some points there.
Go ahead.
But it's interesting that you mentioned about Nucor. So, it's always nice to talk about these generalities, but you really have to put it in the context of individual businesses doing things, right? And in this case, Nucor is a good example because even though what I just said is true, that demand is starting to fall off a cliff, that they're cutting their earnings projections, all that stuff. At the same time, they're accelerating drastically this year their CapEx and their capacity expansion, and they're building more plants for rebar and plate and things like that, even as demand is starting to go down. And the moral of that story is, great investment or great economies are about investment. And investment is about projecting what's going to happen in the future. And when you have these stimulus programs, when you have, sort of very volatile surges in demand and then they start to fall off, it's really hard to forecast what the hell is going to happen. And inevitably, you overestimate how much capacity you're going to need, or at least in the short term. So it just puts everything on steroids up and down, because now Nucor is screwed, and going to have way too much capacity, and they're not going to build any more capacity for quite some time, assuming that demand continues to do like it's going to do. And if you take that and magnify it to the whole economy, that's why, it feels really good when the adrenaline is hitting and everyone's building. Like, look at all the EV plants, for instance, and the battery plants. Mm-hmm. I guarantee you that the demand estimates for that have come down pretty dramatically in the last 6 months. So what do you do with that stuff? What is the hangover after you build that stuff? Those are the issues that drive this cyclicality, both up and down.
Shouldn't that be good news for the consumer, though? So shouldn't that mean that materials will be cheaper and the EVs will be cheaper and all the things that are being built are cheaper? Or are these companies just going to sit on inventory until they can get prices back up again? Shouldn't the decline in the CPI tell us that maybe the consumer will be able to buy all the things they're already buying anyway for less money?
There's two issues there. The answer is no, it's not good for the consumer. All of this is not good for any of us in the end. That's the message that we'll eventually make our way to.
Okay, we're 13 minutes in before we're all going to die.
I hate to give the ending away. But here's the reason. The first is because when you have this kind of volatility and you have this sort of intervention, it's misallocating resources in a way that's inefficient and just destroys wealth, right? So again, whatever, I don't want to pick on Nucor too much, but just to continue with this specific example, they're making this investment because of a policy signal that was given. Hey, IRA, CHIPS Act, boom, huge demand. Wow, let's build rebar plants. Oh no, that wasn't really sustainable, and now we built too much, and you're destroying wealth when you do that. You're destroying, it's a bad use of the economy's scarce resources. So that's, at the high level, that's bad for consumers because we depend on things being allocated relatively rationally, right? Otherwise, you're living in, a banana republic. And the second reason, which I think gets into more politics and into some of the big picture stuff that we'll eventually talk about with the election and with, similar elections elsewhere, is this notion of policy volatility and just sort of shifting into irresponsibility. So, all of this stuff, we talked about the IRA and the CHIPS Act, the underlying terrifying reality behind all of this is over the last several years, we've been in a super low unemployment, super good, supposedly, environment. And the US budget deficit has ballooned in a way that we've not seen since World War II. And we're in peacetime and the economy is good. What does it tell you about the equilibrium of what policy wants to do, of what politicians want to do? And it's not anything Trump did. It's not anything Biden did. They both did it. And before then, it was starting already. So it's not one guy. It's not one party.
Mm-hmm.
It's, it's the shifting game. And that, in addition to making things just harder to predict and that misallocation of resources, the end result of that is, not good for the consumer.
It's terrifying, if you will. Get it? That was really bad. So that's a good way to segue into the election, I guess, because that's the other question that I get on airplanes or when people hear about what I'm doing or people writing into the podcast, people wanting to know what the heck is going on with the U.S. election. So we sort of touched it in general ways, but I don't think you and I have talked about it here on the podcast. So, and you just alluded to it. So I think that's a good way to back into it. Is it that, because you're right that we do not have a fiscal conservative on the ballot, and it doesn't look like that there are any fiscal conservatives or any fiscal that any fiscal responsibility is on the horizon for the U.S. government. But the tactics of a second Biden administration versus a second Trump administration versus a second question mark, who's it going to be administration, are very different. One is tariffs. One is going to be continuing sort of the status quo and all sorts of other unexpected things in between. So how do you think that the uncertainty around the election is affecting things?
The uncertainty itself is higher than normal, just because that's the world we live in now. So that's going to have a negative impact. But I think if you want to think about the U.S. election, you have to think more broadly, because you didn't just have a U.S. election this year, or you're not going to just have one. You had one in France. There's a lot of how do I say? All the big banks are coming out now and they're saying, they're putting out their analyses. Well, there's a 56% chance that Trump is going to win. And if he wins, there's a 40% chance he's going to raise tariffs to this level. And if so, that's going to impact the earnings by, 40 cents. And just take all that and throw it in the garbage, I think, because I think what people sort of underestimate is, we're so used to talking about policy and ideas, and these guys are going to do this, and this is their plan, and this is their plan, and if they get, they're going to change their plan according to this. Like, the reality is, these people don't have a plan. And I'm not saying that just to be dramatic. Like, I think Trump is going to do whatever he thinks is popular, and he could change that on a moment's notice. And so if you want to anticipate what he's going to do, I think you just have to think, like, what does the average median voter want? And what the median voter wants is for the government to spend money on stuff and to lower taxes. And that's probably some form of what we're going to get. And it's not just Trump, because the other side did the same thing when they came into power. So I know that's not a satisfying answer in terms of some precise analysis, but from an investment standpoint, I would point to two specific things, so it's not too up in the air. The first is, if you're buying long-term treasury bonds here because you see the United States heading into a cyclical slowdown, and you're trying to anticipate who's going to do what, and I think that's a mistake, because that is the opposite of the broader trends that I'm talking about. And the other one is just from an investment standpoint, from a hard assets kind of, currency, Bitcoin, gold, like almost no matter what happens, that's probably going to continue to be tailwinds for those assets, kind of continuing longer term.
It might not be the satisfying answer for people in the same way that it's not as satisfying as the tax cuts and the free money and things like that. But I do think it is the right answer. But let me just push a little bit on it to make sure that I understand what you're saying. That would also mean then if Biden drops out of the race, that wouldn't appreciably change the way that you're thinking about this, that whether it was Harris or some new Democratic standard bearer, that there really isn't a scenario in which these bigger forces that we're talking about are going to change meaningfully, that no matter what, you are going to get some kind of populist-leaning executive in the White House. And in some ways, the biggest question is, if it is Trump and the Republicans do sweep the House and the Senate, maybe they can blow it out even more. So it's a question of degree, but ultimately policy is going in the same direction no matter who is going to win. And all this uncertainty about who it's going to be and who could replace Biden and is he going to step down, that's like so the media can get some clicks, and really the focus should be on this longer term thing that we're talking about. Is that right? Or could you see some kind of, let's say Biden wakes up to the fact that he's not with it, and he decides to anoint some other standard bearer. Could you see a course correction there or something that would change the direction, or is it basically just all baked in?
Well, let me ask you, because I don't know if we need to speculate so much because we've just had 4 years of the Biden administration. In your view, leaving aside like sort of signaling and, you know, how things are delivered and the stuff at the margin, what are major policies or decisions they've made that were reversing big things that Trump had done, or sort of drastically different from what you think a Trump administration would have done in terms of, you know, anything related to the economy and big picture stuff?
Yeah, I mean, they were more surgical than the Trump administration was going to be, and they favored things like tax exemptions or credits or things like that rather than tariffs. But no, it was basically the same. But it was certainly a bigger focus on things related to clean energy or green tech. It was certainly, they didn't want to upset the apple cart with China, so they wanted to keep pushing on the semiconductors, but they wanted to keep relations with China relatively stable and keep those supply chains open so that you didn't have supply side concerns. Like that maybe goes away with the Trump administration, but yeah, again, it wasn't appreciably different. There were differences in tactics, differences in focuses. There will be different industries that are going to benefit in different ways from what's going on. But overall, like it wasn't that big of a change. I mean, I think in the end, Biden didn't take down one Trump tariff. Certainly not on China. You did get some resolution with Europe. So like the U.S. and the European Union under Trump were at each other's throats. You'll remember like the Airbus, Boeing spat. Biden put that to bed fairly quickly. There was no, I mean, I shouldn't say no. There has been some trade tension between Mexico and the United States and between the United States and Canada, but it's been orders of magnitude smaller than what it was under Trump and will be again under Trump if Trump does ascend to the White House again. So in terms of relationships with allies, it's a little bit of a better picture for, I guess, the U.S. company. Whereas if it's Trump, I mean, you're right, maybe he'll wake up and have something for breakfast. He'll have his taco salad for breakfast and decide, I want to do something completely different. But it really is America first. I don't care if you're a quote unquote ally, like I care about, you know, U.S. companies reshoring, not nearshoring or friendshoring and things like that. But you have to, you can hear in my voice, you have to start straining to find the real tangible differences.
Yeah, I mean, it sounds like there's a lot of shading, but not binary differences between the two sides. Here's how I would describe it, and here's how I visualize it when I'm trying to analyze what's happening. Because you had Shane on to talk about the French election, and it was very detailed, very interesting, like all inside baseball, you know, and these guys are going to do this, and these guys are going to, you know, ally with these guys, and it's the right and the left, and the, you know, the coalition, blah, blah, blah. And it was like almost hard to follow because it was just so, you know, so much going on. And I think what I would do is I would step back and say, here's how I think about these elections in the US and in France, because, you know, everyone talks about populism, but no one really, like, what the hell is that? That's just a word people use, and they sort of vaguely associate it with different things. But the fact is, like, you've had a very similar experience, almost eerily similar, in places like France, places like the US, and even places like Brazil with Bolsonaro. Like, he literally reenacted the January 6th Trump, you know, like, that's eerie how similar some of these things are. And Milei, like, you talk about AMLO, like, there's a lot of different shades depending on which country and what their collective experience and memory is. So something is happening. And your theory has to encompass more than just France or the United States, because these are very different places, right? And the theory that I find most convincing, again, I don't have any of my own ideas, I just steal them from books. But the book that I think is the most convincing on this is called The Revolt of the Masses. It's written by Martin Gurri. Like I think we've talked about this before, but The Revolt of the Masses basically takes the same title from a book from 100 years earlier by Ortega y Gasset that was talking about the same phenomenon 100 years prior. And the thesis of both books is essentially that you're going through a period in time, and Gurri points out and says, like, this is about technology change, and it's about information becoming suddenly much more widely available, and the attack on authority that results. So basically you have these authority structures that are running society. And in the 19th century, it was like the old aristocratic, guys with monocles and, that whole thing. And today it's, the McKinseyite Hillary Clintons of the world, right? And as information becomes suddenly more democratically available and participation widens, like the structures of authority break down, because you can't keep up the illusion that these people know what they're doing and that they're blameless, and all of the negative things, all of the sins and badness of the existing authority structure get exposed. And you basically have people harnessing the new technology. Back then it was sort of, more traditional, radio, just people having enough money where they could participate in politics for the first time, and they weren't just like, in some little village where they couldn't talk to anybody, like those sorts of things. And today it's obviously internet, but just this notion of taking authority on one hand and, anti-authority on the other hand as the two opposing forces, I think is a much easier way to make the connection between all those different countries and what's going on. So like, to use the French example, again, Shane was like, oh, the right and the left. Like, the thing that people, I think, don't quite get about the Rassemblement National in France, for example, is like, these people, they don't have any ideas. They don't have any policies. Like, just go to their website, go to the France Insoumise, the coalition's website. They have 26 pages of single-spaced text as their program. It's like, holy God, it's like a thesis, right? And you go to the RN's website, it's like 8-page PowerPoint that's mostly pictures of Jordan Bardella, like wearing a suit and doing presidential looking things. And there's like 4 bullet points, like, French for the French, lower the retirement age again. Like, they have no ideas, and that's not what they represent. And I think what I'm getting at is people, 30 something percent of the population didn't vote for them because they're convinced by something they said. They voted for them because they represent, the finger, the middle finger to the structures of authority. And in France, there are very clearly defined structures of authority. And I'll tell you, that's why people dislike Macron, because he absolutely 100% represents everything that people dislike about that and everything that you can poke fun at. And he himself tries to keep up this sort of mirage about his personal life and his weird ass relationship with his wife. And, he releasing these carefully curated videos of him with the punching bag. Like, he is the opposite of the sort of honest, like, he's the anti-Millet. Millet is nuts, but he'll be honest with you. Like, Macron is, the Olympian guy, the Wizard of Oz behind the curtain.
Yeah, there's so much to break apart there. The first thing, you said this jokingly, but I mean, you talked about how all of our great ideas come from books. That's exactly right. We stand on the shoulders of giants. But the interesting thing about this information environment, I find, is that people have stopped reading books. So more than ever before, if you actually take the time to read books, like, you will be smarter than everyone else, because nobody's reading books. To your point, they're going and reading the 8-page pop-up book from the RN or something like that, or they're on Twitter, or they're on social media. We like to think that everything has been digitized. most books have not been digitized. If you want to really go like learn a different perspective, go like check out a book from the 1920s about some topic that you're interested in. Like I remember once I found a whole suite of articles from Japanese authors about like Korean ethnography in the 1920s, and they were trying to justify the policies they were about to enact on Korea, but they were doing it with science and facts and like very neat and tidy Japanese arguments. Like you learned a lot there about the Japanese worldview. So there's that thing I wanted to say. There's also, I mean, Ortega y Gasset is like, he wrote Revolt of the Masses in 1929 or 1930. It's probably one of the most important books of the 20th century. And he was the one, I went and looked up this quote while you were talking because I wanted to get it exactly right. But this is from chapter 1, where he says, as they say in the United States, to be different is to be indecent. The mass crushes beneath it everything that is different, everything that is excellent, individual, qualified, and select. And again, he's writing in 1929, 1930, and he's predicting, I mean, fascism is already starting to rise, but he's basically saying, exactly to your point, we're creating this idea of the mass man. And fascism is the political manifestation of the grinding down of individual difference, of individual excellence, all these other things. And to your point, like when you get into the realm of populism, populism is nothing but making the people happy. It's bread and circuses in Rome. It's free helicopter money if that's what people want. It's tax cuts if what they want. It's arguments about who can go in what bathroom. Like all of these things are touching on the populist threads, which is the last thing I wanted to say in what you said, which is I think it's wrong to throw someone like Milei into the same bucket as these others, because yes, he has populist elements and he's playing some of the same hits, but he's different because he's promising pain and suffering. He's not promising handouts. He's not promising what's going to make you feel good. And maybe this is like even more demented. Maybe what people want is to feel bad. But he's promising that he's going to make you feel bad, that it's going to hurt in your pocketbook, that society is going to suffer because of the excesses of all the elites that came before you. It's also, it was much less weird in the British context. But if you look at what happened in the UK election, kind of a similar message from the new Prime Minister, Keir Starmer. He didn't take a victory lap and say, oh, Labour is ascendant again, and we're going to rise up for the proletariat, and we're going to rebuild the worker. No, he said, there's no money. This is going to be really hard. I'm not going to be able to do anything for a couple of years. We have to start this, mission of national renewal and rebuilding everything because everything has been broken. I think you juxtapose that with a Bolsonaro who's like, no, keep the fuel prices low. Let's get the truckers moving. Let's do the January 6th stuff. Or Trump, who it's the same sort of thing, like give them the junk food, keep them moving on the train. So for me, there is some, and maybe it's wrong. Maybe they're preying on sort of a deeper malaise. Oh man, I'm good with the puns today. Malaise, that's really good. In Argentina itself, where what they want is someone to tell them how bad they are. What is the joke about Englishmen? Like all they want is a stern woman to put them in their place or something like that. Anyway.
But I think that brings up a really good point, which is, I guess, 2 points. The first is, this is all going to vary based on a country's individual collective memory. And that's why, so there's country-specific issues that are very much at play, which really matters for analysis and thinking about where you want to be, like physically. Like I'm physically in France, because I am making a bet that they're going to be okay for a reason. And then the other element is within, across any of these countries where this is going on, I think there's an element of exhaustion. And this is what Martin Gori will say in his book, which is really worth getting, by the way. I think you can get it for like $20. There's a really beautiful striped press edition. It's worth picking up. But just this notion that there's no reason to expect this to change until it exhausts itself and people say like enough. And I think there's an element of that in the UK probably going on, where they're like, oh my God, we had Boris Johnson, we had this Sunak, like Brexit. It's been 8 years of craziness. Like we get it. We need to self-flagellate a little bit and kind of, have a Sunday drinking just, vegetable juice and that sort of thing. But on the country by country thing, I think it's really important when we're thinking about investing and thinking about, global exposure, because these countries that we're talking about are very different. So, I would say the experience between France and the US, even though on the surface you'd say, oh, they're both Western countries, they're both, similar political systems, blah, 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 is very different. And I think it showed that, like, everyone says, oh, Macron, like, the takeaway, I've not been satisfied with any of these takeaways out of this recent election, because everyone's saying, oh, it's a disaster and ungovernable, blah, blah, blah. I mean, what happened was people rejected anti-reason. They rejected, I'm sitting here. I have a quote from the Ortega and Gasset right in front of me. Let me read it, because I think this is from 100 years ago, and he writes, there has appeared in Europe a type of man who does not want to give reasons or to be right, but simply shows himself resolved to impose his opinions. This is the new thing, the right not to be reasonable, the, quote, reason of unreason. And I think, again, that's what you're up against. But because of the unique history here and the memory of, like, oh shit, we've lived through this and it was a nightmare, a national nightmare, that you have sort of a collective understanding that, okay, we're going to do our political games, and, Mélenchon will have his fucking 26-page thing, and Macron will, but, like, when it gets real, we're all going to band together and say, like, we believe in the game. We're not going to support the reason of unreason. And that's specifically within the French context. The Brazilian context, we don't have to get into that, but I think it's worth thinking about their collective memory and how it's so different from everyone else. The people who are in power, even though they've exhibited a lot of the same things you've seen in the US about, rejection of elites and authority and Bolsonaro, blah, blah, blah. At the end of the day, the people in power remember what chaos is like. They remember the 1990s. They remember the fall of the military dictatorship. Like, no one wants to relive that. And so you have sort of a banding together around reason. And the thing I worry about in the US is, like, we've been, as Ortega and Gasset says elsewhere in the book, like, we've been enjoying the fruits of reason for so long, we take them for granted. And now we're like little children who, don't know where the money comes to pay the rent. And we're just, let's just break everything, and because of that unique history, I think that worries me.
No, I think you're exactly right. And I think that was the thread to pull out of what Shane said about the French election, which was, he took it a step farther. He was saying everybody's saying hung parliament and Macron lost. He was like, Macron won. He just wasn't expecting the far left to get their act together. But in general, he did exactly what you're talking about. He exposed the bankruptcy of the promises of the far right and defanged them meaningfully. And the French context is interesting, because the other thing about France is that the executive does have so much power. And you've already alluded to it. It's less about a turn away from centrism in France and more about Macron, you're really weird and you've been in power for too long. We don't like you anymore. If you take Macron off the head of the snake and you put someone else in there, it probably the center is going to hold there in general, which is not true in the United States. Like, unreasonable reason is definitely what's dictating things in the United States. And maybe it's because we haven't suffered any pain in recent generations. The 90s for us, we weren't integrating, the Eastern Bloc countries into a fledgling European Union. We didn't have any military dictatorships or inflation things. We were listening to Third Eye Blind and having a good time. I'm like desperately nostalgic for those times. And maybe we think we can go back to those times just by throwing in a couple tariffs, but it's probably not going to happen. Well, so let's round out here, because we could quote Ortega y Gasset at each other all day. What brass tacks do we do with this knowledge? And maybe this is just the beginning of a conversation, but if you're starting to look at, okay, what do I do with my investments over the course of the next 6 months? Or, okay, you're talking about currency debasement and blowing out the fiscal deficit, and you guys have talked before about how the United States can afford it. Should I start worrying now? Like, do I need to start buying Bitcoin? Do I need to start buying these tree companies while they're in distress because they'll be a nice source of income going forward? Like, what is the roadmap for next steps leading up to the US election, and also sort of these longer term things over the next couple of years that we're thinking about?
The tangible recommendations that I would come up with and that we're sort of expressing in our own strategies are, there's a few of them. The first is don't buy long-term U.S. Treasury bonds. I think that's a trap. I think people are using the experience of the last 30, 40 years as a rule of thumb and saying, oh, well, we're going to go back to 1%. Like, it's not clear to me what people are playing for here, especially when you look at inflation expectations and how they're tethered to apparently things that have nothing to do with actual inflation. Because even as inflation has come down, inflation expectations have remained steady, as we've talked about in our last discussion, and appear to be maybe coming unhinged. So that is going to outweigh any cyclical factors when the Fed is determining policy, and it's going to outweigh, anything else driving long-term yields. So I think that's a contrarian view, but I still believe that very strongly, and the numbers back us up so far. The 10-year U.S. Treasury yield is 4.22% as we talk, even though the evidence has accumulated pretty clearly that we're heading into a significant slowdown. So that should, get people wondering, my God, what's going to bring this down to 2%, if anything? Maybe it's going in the other direction. So avoiding bonds, first of all, I think assuming that you want to have more liquidity than otherwise, because in chaos, you want liquidity. Chaos means your discount rates go way up, to put it in finance terms. And if your discount rates are way up, you want a lot of cash on hand, both to kind of take advantage of that in the broader sense, because you don't want to be committed to too many illiquid long-term things, because chaos will destroy them. But also, to seize the opportunities when they come, because chaos means people are going to be puking up different kinds of assets, not just in the public markets, although they will be doing that for sure, but in, private equity and private real estate, gather your dry powder together, I guess would be the point on that one. And then the third thing is look for where authority and responsibility lie and put your money behind that. And I mean that both on a country by country basis. We do global investing. Almost every U.S. investor, actually only 30% of our audience is in the U.S. now. So
I noticed
I should
that.
say, yeah, that's pretty wild. Wherever you are, you almost certainly are overweight your own country. And if you're in the U.S., we know, statistically that's absolutely true. You need to be thinking about diversifying that, and you need to be seeking out the countries where there is sort of a Big Daddy Macron type figure who is going to be the adult in the room, even though people hate him, and be able to get away with that, because those are the sorts of polities you want to have your assets invested in, not the crazy, Saturday night, high on cocaine, throwing policy around no matter what kind of policies. And of course, I'm being a little facetious here, but at some level you want to take that into account when you're allocating across different countries. And then, one thing to think about, I'm thinking more and more about crypto now that the wave has passed and everyone's talking about AI now instead of crypto. I think now is crypto starting to get really interesting, and not as a speculative bubble vehicle, but as a true alternative to other options out there. And the reason is because when you think who is the hard money faction in America, for example, the last time in the 1920s you had this, and Andrew Mellon was saying, liquidate the banks, liquidate the trusts. Where are the Andrew Mellons, where are the Volckers today? I don't think they're going to show up. And in many ways, the hard money faction, we had to create it with an algorithm, because no human in this environment will do it, just like they didn't, ultimately in the 1930s, and everyone devalued, and everyone, kind of played the beggar thy neighbor game because you had to. So thinking about artificial sources of hard money, of authority and responsibility, crypto is an interesting example of that, because it's it literally cannot be printed. So
Yeah.
so those are the big.
It almost sounds like you're with the third, you're hedging the second. It's like if you can't find the place of authority, like crypto is where you can maybe hide out.
No, but those things are not mutually exclusive. I would put crypto alongside, you know, France and Germany. You know, we didn't talk about Germany, but I think Germany is not being irresponsible. And there's very specific reasons for that. But like those things can dovetail with each other. And again, like I'm not saying, avoid the US, because the US has a lot of amazing opportunities and it's going to continue to, and it's not going away. But, you know, along that vector of, you know, policy volatility and things like that, like that's going to be bad. So this isn't to say go out and put all your money in Bitcoin. It's to say when you're thinking about where to put your money, thinking about that sort of responsibility should be a key part of it.
But Rob, should I buy more Tesla stock? Is that what I should do?
Not today. The robo-taxi thing got delayed till October, so the stock is crashing. Like, damn.
Oh well. Anything else you want to say before we say goodbye to the listeners?
I think I've said enough for one day.
All right, sounds good. Back to our books. We'll talk to you later. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.